To my desktop here, it's the trade of the week, July 25th. Quick disclaimer as usual, what you're going to see is just some cool technology. We are content publishers, software as a service company. We are not registered investment brokers or advisors. So if you're looking for some financial advice and you want to pay some fees, you got to look up those guys. But we're here today to just kind of show off our technology, maybe look at a few charts, get a few ideas, but none of this should be construed, of course, as investment advice. All right, the lawyers are happy. Always got to stop on here. You're not alone with trade ideas, and this is really geared towards the newer people, maybe the test drive people or people thinking about subscribing. This is basically focused on how we pride ourselves on onboarding and concierge service for new traders. We recognize this is a very powerful program and can take a little bit to learn. There's a bit of a learning curve in there. So we've got 4 webinars a week, this one included, all of them at 5 p.m. Eastern. You can see them there. We also have the live trading room every day during market hours with Barry Anderson, who is trading his own account, answering questions, demonstrating the software. And additionally, there's hundreds of traders in there. And there's a handful of them that are really good that a lot of people like to follow and kind of keep an eye on what's going on in the market. So it's a great room. It's a free room. Free is a good price, and you do not have to be a Trade Ideas subscriber to get into that room. It's just kind of a way to get your feet wet and see a little bit about the product and hear what people are talking about. We also have Friday support sessions. It's a new thing. I think we're on our 8th week now, basically 11 a.m. to 2 p.m. Eastern. It's a format just like you see here. We use the GoToWebinar interface, and you guys can ask questions, and we try to demonstrate stuff for you. So very popular event every Friday for 3 hours. It's open forum. Come on in and ask any question you want. Nothing is too basic. Nothing is too advanced. And let's see. Oh, lastly, what's not on here is if for those that do subscribe, you are entitled to a 1-hour free mentoring session. We do desktop sharing, talk on the phone, one-on-one, find out what your parameters are, what your ideas are for using the software, and you get full attention for 60 minutes. That's included in your first month for free. Beyond those 1 hours sessions are $99. So it's a really nice value for your first month when you get that one-on-one session. All right, let's quickly move on. Well, this is probably a good example of what the last slide just shows. You know, people are really adopting to this product well. They're really enjoying it, and we've got some parabolic growth going as the word continues to get out. I mean, I know you guys know us, but a lot of people still don't. We're still kind of under the radar and slowly coming into the radar. So wonderful subscriber growth, and we thank all of you regulars for being part of that. This slide real quick, newbie traders, put your fingers in your ears and say la la la, because this is not for you. This is interactive brokerage auto trading. If you have an account with IB and you've got a real good handle on using Trade Ideas and you've got some of your own custom scans, we don't hook up the AI to this, but if you want to auto trade your own alerts and your own back test and your own systems with a auto direct connection to IB, this is a new product coming out for you. It's called Brokerage Plus. Again, it's for intermediate to advanced users. Newbies really should just disregard this until you understand what you're looking for your scans, your method, your market, and understanding the software. But it's still in beta, and I believe it's getting close to coming out of beta. Still don't have a time frame on it, but if you're interested, tradeideas.com//beta. Why is that not working? I can't see. That's covering for me, but there's a link down there at the bottom, or you can email info@trade-ideas.com and get some more.
There you go. It went away.
There you go. It went away. You guys saw it too, huh? Okay. All right. Let's see. So next slide is going to be the agenda today. Just want to let you know we're probably going to go till about 10 minutes to the top of the hour. I've got an appointment to make, so we're going to be kind of an abbreviated version, but we're still going to touch on most of the things we normally touch on. Market recap. We'll take a look at the Holly AI recap and how it did today. Trade of the week for this week, and maybe a couple that are still open in the past. And finally, what's working right now? I've got something I want to show you because, as we all know, change is the only constant in the marketplace. What works one month might just turn on a dime and stop working the other month. So that's our agenda, and we'll get to it. So let's just start right off here with the S&P. I'm going to come back to that. You know, the S&P is usually where I like to start. Trend line is really no longer an issue. We've had numerous days of up movement with a couple of gaps in there. S&P's actually gapped up today, but kind of fell back in. We'll see as we go through here that in the day that some selling kind of came in towards the end of the day, which has been unusual lately. Usually the end of the day has been more firm with buying, but nonetheless, this is a resilient market. Every attempt to break these support levels here was not reached. Price closed above, and price moved back higher, leading us higher, all-time highs, and they had some consolidation. Looks like an inside day today, so the Qs might even start flagging. But what I found the most interesting of today of the four is the IWM. I've been saying for a while, watch this thing. It's getting ready to want to break out. The IWM is basically your Russell 2000, which is an index of a bunch of small cap stocks. So it's going to be your stocks under $10, small market cap under $5 even. And I had said when the IWM breaks out, get ready to start giving a little bit more focus and attention to some of these small cap stocks, because you never know, they may really start to try and follow suit with the IWM now basically taking the baton today and leading the way. This was the nicest looking index of all four that we look at here. The last one is the Dow, the diamond, and as you can see, it's basically still holding this prior support current resistance level, but just chopping back and forth within the range. So to me, without a doubt, today IWM is the prettiest of all. A really nice pullback and a gap above and moving higher. So there may be some nice follow through tomorrow as institutions and professional traders alike look at their charts and start to see that the small caps may be making a move. Just keep that in the back of your mind. Chance favors the prepared mind. So tomorrow we could see some follow through in some of the small cap stocks. But that's really all that we got for you in terms of the market recap. You know, there's no red flags for the bulls. The bears are frustrated as heck. They can't get this market to roll over. And so shorting is not really the menu of the day. And that's a great segue. I'm going to just pull this right back up. And last night I put a tweet out that I had noticed Holly was done with her back testing in the late evening, and I pulled up trade ideas, and all this was blank because this was before today's data. And what did I see? I saw 14 long strategies. I thought, wow, not a single short strategy in there. That's pretty interesting, and that was worth noting. So, you know, when you guys see something like that, just be aware that this, you know, was not pulled out of a hat. This was basically the final scoring system of the AI's back testing going over in the evening. And the only things that showed up with a high score were long strategies. And that kind of, again, dovetails with what I was just saying. You cannot stop this market. The shorts are just continually getting run out and squeezed out and stopped out. And there really is no indication on any four of these indices that any sort of technical breakdown could be imminent. So the markets are still very healthy until said otherwise. Not going to spend too much time on the markets. Did you want to add anything before we move on, Andy?
No, there's not a whole lot to add. It's just a very, like you said, a very resilient market, and just keeps motoring higher. I will say that I was reading an article the other day about there's no more money on the sideline. In other words, I'm not going to go in depth of their logic behind it, but you know how you hear there's all this money on the sideline, money on the sideline. Well, you're not hearing that as much anymore, and I don't think there's a whole lot of money on the sideline. So, but that doesn't mean it can't stop. You know, it takes sellers to push it down. So it just doesn't seem like anybody's interested in selling. So,
one of the things I noticed was that. Can you hang on for 1 second?
Sure.
One of the things that I noticed was the volume was a lot better today. In all four of the indices yesterday, we had a very low volume move. The spiders, the IWM, the Qs, and the diamonds, they were all moving on like half the normal volume. But today, if we look at relative volume, I just did kind of a quick scan as we were here. IWM did normal volume, Qs did normal volume, well, for the most part, 0.71 it looks like. The spiders did above normal volume, 1.11, and the Dow was just under normal volume. Right. So kind of back in the interesting volume kicking in a little bit compared to what was happening yesterday and the day before. We've had kind of a sleepy summer rally on lower volume, but today definitely volume's doing a little bit better. So didn't want to leave that untold. All right, so where was I, Andy? We were talking about all the long strategies coming in. Exactly. So I was just trying to go back and just say, like I said, I see no reason for any worry at the moment. Buyers are still fully in control. And it's unusual that it was kind of confirmed by the AI last night, only coming out with long strategies. So when you see something like that, we call that a directional bias. That just basically means that that's where the path of least resistance is going to be. It's going to be long. And as it were, today, all of the trades that did come out were long trades. And the AI had a pretty decent day in terms of risk off performance, which means basically exiting the AI at the same time, or exiting the trade at the same time the AI does. And there was one more thing that I thought was interesting. If I sort by exit reason here, you know, we all have a few different reasons for exits, but there's not one single stop loss. There was no single trade that hit its stop loss today. There was a lot of time stops, and there was a lot of reduced risk and a lot of profit saves. The profit saves, of course, are the trailing stops, as you will. Basically, Holly not allowing itself to start off in the green and then finish off in the red. So a trailing stop is basically what profit save is. Reduced risk is very close to a stop, but typically it doesn't allow it to go down to the stop. The AI is saying, look, this trade is not really doing what I expected it to do, so we're going to go ahead and fish or cut bait and just move on and just let it go and not let it go down to its full stop. So a lot of these reduced risks you can see over here in this column, 25-cent stops, 31-cent stops. The AI basically cut them short at, you know, -2, -3, -5. So some good risk management there on those. But then we're going to talk here about some of these ones up at the top. And I think Andy had some ideas that he wanted to talk about in terms of kind of sector performance today. Is that a good segue for you?
Yeah, I think so, because I think I mentioned to you pretty much right at the open, one of the two of the first three alerts that fired from Holly were oil plays. And if you look, and I've mentioned this before in many of these guys, that's why we like for you to have a sector watch list up. Steve can show you one now.
Yeah, let me get that.
Yeah, and if you look, yeah, the oil sector was very strong today, and OIH kind of fell off a little bit at the close there, but it was for the most part of the day, you know, pretty much at the top. And then you had ConocoPhillips and then that Oxy. Once you get to learn, you know, what symbols go to what sector, you will be much more efficient in trading markets. And that's why we've kind of been introducing this sector more to you guys, you know, so you'll learn to associate symbols with certain sectors. Because if you were on ball today, you would notice that ConocoPhillips and then Oxy came out at 6:37, so 7 minutes after the open. Gosh, where did ConocoPhillips? Well, you don't have it sorted by time, so that's okay. But I think it did come out just before it, 6:35. So you had two fire off. Right there, you go. Two fire off in the first 10 minutes of the day. And if you looked at your sector watch list, you would have noticed oil was at the very top of the board there. And all you had to do is pull up USO and see that it was gapping up. And now you have two Holly calls.
Let me just add something real quick. I know it's hard for everybody to learn, you know, what stocks are in what sectors, but here's a real easy cheat sheet right here. This is our single stock window. Tells you right there, Occidental, crude petroleum. Tells you right here, ConocoPhillips, refinery. Well, we know JetBlue, that's an airline passenger, but if you're not sure what Swift is, well, that's a trucking. And so, a quick way to learn what some of these are as a trade comes out is to double click into it and look up here in the single stock window and see exactly what sector it might be. And if in fact it's a sector that's leading the way like steel or USO today, well, there's a little bit more information for you that you may not have had.
Exactly. Very good point, Steve. I'm glad you brought that up. It's a very good cheat sheet right there. And eventually you'll learn them. You will at least learn the top 5 or 6 in each category. And but anyway, I don't think we need to break down each trade. I will say that Oxy provided a nice entry and also a nice risk on pretty much profit all day until I'm not sure how it exactly finished up. Oh yeah, we have to talk about QBack.
Yeah, there was one trade, this QBack. Again, it's just a classic example of, like we say, when you're crossing the street, you want to look left first. And so basically here on the daily chart is the blue line of the suggested entry. And if you zoom out, you'll see that it's well above prior resistance. So it's just like crossing the street. Look left first to see what's coming at you. And both of those levels right there had already been cleared by the time that blue tag came out. So big winner of the day, probably shouldn't be too much of a surprise, is that technically this thing broke out on good volume, by the way. Let's take a look at our volume metrics. 6.42 relative volume. That's huge. It was doing 6 times normal volume as it breaks out, to multi-month highs. So this is why we always kind of laugh and just say, look left on the daily chart and see what you got coming up in terms of recent resistance. Anything else you want to add?
No, that's just a very, very powerful, chart. You just have to trust it. Sometimes it's hard to trust it when you see from whence it came all the way down from $5, but at the same time, it's still a breakout, and that's just a very powerful chart right there.
And so what was interesting is there's actually an error in the histogram here on risk off, but risk on finished negative for the day. And it kind of goes back to what we were talking about with here's the S&P, okay? So the backdrop of the market really does dictate how well risk on is gonna do. So if all of our trades are long for the day and we start to get some selling towards the end of the day, it would make sense that profits need to be taken, and the risk on mode is certainly not gonna deliver what we want if we get some weakness. But this was the first day in many that we've seen this going into the close. So again, just a pretty solid day, nothing but longs. Again, you guys don't have to get so focused on the individual trades, but how many trades are being made and what directions are they going? And the AI still says that there is no reason to go short. It'll be curious to see tonight what the new back testing quantitative combine comes up with, and maybe see if there are a couple of short strategies that show up tomorrow. But for the moment, the AI was right. It's picking up on the fact that the least resistance is up, and there's really no reason to be going short. All right, so let's move on to, what did I have next? Okay, trade of the week, management. So this week, like many weeks, the trade of the week was derived from one of my favorite scans called Squeeze Me. And here is the scan. I'm going to show you why it's not on there at the moment. Going into the weekend, this is typically the kind of chart that we like to look for. Stocks that are maybe getting ready to make a new 52-week high, but with a very high short float contingency. And that's what this column here is sorted by. And on Friday, going into the weekend, run was just popping out here I think it was about 28% short. Well, what happened is the short float data updates twice a month for everybody, and the short float data dropped under 25 and went to 24. Well, as it is, the configuration for this particular scan where we got this trade, the minimum short float percent is 25%, and I'll show you that. So that's why it's not currently on, there it is. That's why it's not currently on the scan anymore, is because that filter is no longer satisfied by the short float being at 24.6. But nonetheless, we caught it going into the weekend. Loved the pattern. It made a resistance level right there, pulled back, and then brought it back up. And basically, this was where we were going into the weekend. And so this is what's been working lately, talking about what's working and not working is short squeezing, because the short sellers are not having any luck in this market. They continue to get short and get squeezed out, and we can find short squeeze events, and that's what we were looking for in this particular case. And so this is where it showed up on the Trade Ideas scan. Additionally, and as kind of a side note, going into the weekend, we had talked a lot about the sector strength last week. The sector of the solars were looking pretty good, and they've had a nice run. And so run, and not to use a pun, run was kind of lagging them. And so it was a conditional trade. Basically, it had to trade above this wick right here, and it did so right in the first hour of, on the first few minutes of the day. Now, today, obviously, we've got a red candle that pulled right back and settled right where I would hope it would not go below. Prior resistance can become future support. So I'm not too worried about this right here. The line we're worried about is this line down here. This is our risk reward line down here, is where the stop would occur. But ideally, if we can keep a run above this level right here, we'll see what tomorrow brings. But I want to show you guys something. Let's see if I can find which one is which. Yeah, this was the first one of yesterday morning. So this is what I want to just drill into people that is unique about Trade Ideas, and not just looking at a chart with a green bar. We've got the single stock window here once again, where we get our data. Short float is there. But what I'm always looking at is relative volume here, and then I've got 5-minute volume and 1-minute volume right there in the upper right quadrant, so I can quickly get a view of how much interest is in the stock. This is the kind of stuff you can't see just looking at a chart. So this is the secret sauce that Trade Ideas can help you make a decision with. As the stock was breaking through, look at these volume levels. I mean, we opened up at 2.5 times normal volume. The 5-minute volume participation was 3.8 times normal, 380%. The 1-minute volume was creeping up to 900%. This is exactly the kind of thing that you want to see as a price level tries to break through a new level, or even more importantly, a resistance level. And so that was screen number one. And throughout the day, well, another candle came in and the price was gravitating away from the breakout. And this is where I think some of the short sellers started to freak out. Look at the volume increasing here. The relative volume went up to 3. And the 1-minute volume was at 3,900%. So the 1-minute volume was doing 39 times normal what a normal 1-minute candle would do for this particular stock, 5-minute, 1,200. So this is really one of the ways in which you should be looking at some of the underpinnings of what's going on with just the chart, is what is the 1-minute and the relative volume doing as we're at critical levels. I think there's one more in here. Let me see. Yeah, it's this one. And I might add, as it pulled back throughout the day, we were very, very low volume. But look, as we got back and started to approach highs again at the end of the day, look what happens. The 5-minute volume and the 1-minute volume start to come back in. So if this had been at highs of the day and 5-minute volume was showing 50% and 1-minute volume was at 17%, you might not have a lot of confidence that their buyers got your back and are going to push this thing higher. But I tell you, when you see values like this one right here in the thousands, that's about as pretty as it gets. And again, the Trade Ideas technology allows us to look and peer into the 1-minute and 5-minute time frame. So that's kind of the thinking, is how the trade was progressing. Again, we found it from the squeeze me, and yes, I do see people asking for that alert. So before I forget, I will save and share that alert. If you don't have it yet, I'm going to drop it into the chat window. So on your GoToWebinar tool panel, floating tool panel, I'll put in squeeze me, and that's the cloud link for it. And there it is. And so if you click on it, for those that aren't aware, once you click on it, it takes you to this page right here. All you've got to do is highlight that code in the address bar. Once you've got that on your clipboard, just simply file and load from cloud. It's right there. And there you go. And that's how easy you guys can have a duplicate copy using that cloud link that I dropped in there. So the idea of this scan, once again, for those that are not familiar, is trying to find things that are very close to a 52-week high and getting ready to break out. I mean, let me just show you an example. If I turn off one filter here, which is the position in 1 year range, we get a lot of junk we don't want to look at. So let me just turn this filter off and reset the alert. Now you can see I've got way too many choices to look at, and what we're trying to do is take the fire hose data and turn it into a trickle and narrow it down to some a handful of quality plays. So what this is doing is looking at a 1 year range and saying only show me the things that are a few percentage points away from making a new 52-week high. And that's the area in which we feel the short sellers will freak out and capitulate and give up. So position and year range, we just put a 95 percentile in there, and then it cleans up all the other ones, and we're left with just a nice little handful of stocks that are going to 52-week highs with high short float. And then it's up to us to kind of come through. Well, this looks interesting.
Looks pretty, doesn't it?
Yeah, well, you can see, Andy, I've already got a blue line in there, don't I? What that blue line means is that the price alert has already been set for that. So rather than chasing your tail and trying to run around and find the next big trade, you can use price alerts on things that really look good and set it and forget it, and then let it come to you. Let the trade come to you, and you'll know why you're in it, because the notes probably say fold has 35% short the float, and it's going to a 52-week high. Chances are the short sellers are going to freak out and start to capitulate, and that's what we are certainly hoping for on that scan. So that's how we found the trade of the week scan for run. I would have loved to have seen it close better today, but it didn't. But it's likely that it's just going to try and build a base here at this level. If it drops back into the range, well, then things can start to be a little bit more dicey. We just want to manage the trade and make sure we don't let it fall below 685. But patience is a virtue, and stocks have to breathe. Sometimes you got to let them go up and back, 2 steps forward and a 1.5 step back. And quickly, I just wanted to go back to what was our last one that was working? PayPal, still hanging in there. It's actually kind of building a bit of a flag, just kind of giving back a little bit, but still working very nicely for us after that breakout. And Crocs, I remember talking a week ago, somebody asked me about it, and we addressed it, and I looked at this wick right here, and this wick right here is a low that tried to break the low of this range, and since it failed and popped back up into the range, I said, well, that's going to be our drop dead wick right there. It was a test of that lower end range, and it didn't follow through. So going forward, if anybody wanted to use the bottom of that wick, that was going to be your best out as Crocs. But lo and behold, Crocs bounced right off of there nicely and put in a really nice day today. So this one is also still alive and well. Yes, it was. You're correct, Andres. It was the trade of the week a few weeks ago, and technically it's still alive. Okay, and what was there one more we were going to look at?
I think you were going to look at
PayPal and run.
Right.
So those are some of the more interesting trades of the week that are still open. And I hope that makes sense as to how we found it and what the strategy behind it is and what we're looking for. But again, patience is a virtue. You know, the only line we're concerned with here is this 687 line here down at the bottom. That would be the bottom here. Okay, Pandora, any comment on Pandora? Yeah, you know, I gave that out yesterday. Actually, I'm going to do a humble brag here. I gave out 3 trades yesterday in the market and the webinar that looked decent. Pandora was one of them. Again, we've got a high short float of 39%, which could continue to drive the short sellers higher because they're not getting their way. X, I thought looked great yesterday. It actually had earnings today. It's higher after hours, but nonetheless, it's still put in a nice gap up and is going to probably have a good day tomorrow. Short float on that, it's only 16, not that bad. But JCPenney caught my eye yesterday. If you were in the room, you noticed that I was talking about this flag here and the fact that JCPenney's got 42% short the float. If they happen to find a way above this little resistance wick, it could be off to the races. So that one was looking good as well. All right. Let's see.
I'm going to answer Randy's question while you're looking for the next segment there.
Sure.
Randy asked, Trade Ideas takes up my whole screen. Do I need a second computer? Randy, yeah. If you want to take trading seriously, or even if you're just going to be doing it part time or whatever, it really does. Monitors are so cheap this day. You really need a second monitor. You need one for trade ideas and of course one for your execution platform wherever you're trading on. It's really tough to try to toggle between two platforms, and so yes, I would definitely recommend not a second computer, just a second monitor.
Okay.
Yep.
Also, just a little quick workaround. There's a options tab here for layouts. If you don't have this box checked, loading layouts, open relative to main window, you might have windows opening up on different screens, but the main window is always going to be the window that has the toolbar firmly in there, just so you know. And for those that are curious, if you want to minimize all of the windows at once, just click the minimize on the toolbar and then locate in your icons the TI Custom Ideas, Trade Ideas Pro, which is usually the top one or the first one. That pulls the toolbar back up along with everything else. So if somebody was frustrated with that, that's a nice workaround. Yes, the webinar will be recorded. It will be on our YouTube page later this evening. And okay, so I find this interesting. 52-week squeeze here. Couple of older trades of the week. CHGG was on there today. Weight Watchers was also an old trade of the week. So these things continue to move to new 52-week highs, and certainly happy about that. Okay, so I wanted to switch gear. Well, speaking of squeeze 52, let's go ahead and do something here real quick. I had back tested this about a month ago, and it was just doing very, very well for swing trading, for holding stocks for maybe 7 days. And this is a great example of why you got to stay on top of back testing. These were all the same criteria that I had last time. And so I just happened to check into it the other day, and I'm going to go ahead and run it for you. And I'm going to show you as soon as it completes that it's not doing anything anymore. And so what that means is, again, change is the only constant in the market. What does work eventually will stop working. And the best thing you can do is identify when something is no longer working. Now, this was a great scan, like I said, 6 weeks ago. But what's happened in the market in the last 6 weeks? Well, when you look at the cues, and all we see is that old board game, chutes and ladders. And so it's been very difficult to get, I think, stocks to go through 52-week highs and maintain that with the kind of backdrop that we've had here in the last 6 or 7 weeks. So that kind of makes sense to me as to why that scan isn't working. But fret not, I have an idea for you guys. You've heard me talk about the washout bounce a lot. Washout bounce is looking for candles that have washed out sellers and then popped back up into the range and closed strong. And I've got this thing optimized, pretty good to where I only get maybe 2 or 3 a day. There's a lot of filters going on in here. And the 5-minute high is the actual trigger that will set this alert off. And what I usually tell people is this is kind of a discretionary alert to wait till the end of the day for people who have a second job and they just want to log into their E-Trade account and see if the hammer candle is still intact at the close. And at the close, typically we have some decent movement for the following few days. I'll go back to the poster child, DDD. Well, here was the hammer candle right there, that long tail, which basically washed out all of these short hands and then popped right back up and closed like nothing happened. Well, in those type of scenarios, it typically means that risk is mitigated going forward for a few days. So this can be an excellent swing trading alert. And I know many of you out there, you don't want to day trade. You ask a lot of questions. Well, what are some of your better swing trade alerts? How can you point me in that direction? Well, I'm about ready to point you in that direction because I back tested this today, which I haven't done in a few weeks, which is probably a little bit longer than I should have. But look what happens if we go into back test here, and basically it's set to run all day. The exit, if you'll notice, is all the way down here, tomorrow plus 3 days. So it's actually a 4-day hold time. So we're talking swing trading here. Not talking minutes in the day up here like you would adjust, but no, we're talking at the market close tomorrow plus 3 days. So this is a very long-reaching strategy. When I hit buy, it's basically, well, let's do this first. Risk management is also important. In this particular scan, I'm saying, well, I'm willing to risk 2% to the downside before the back tester stops it out. and I'm willing to give it a 10% upside. So this is a very aggressive risk-reward ratio. It's basically 1 to 5, risking 1 to make 5. And so this is a part of our backward scan. Nothing to do here in the advanced. I'm just going to go all back to 64 days, and we're going to back test 64 trading days. And when I hit the button today, I was kind of surprised, and I was kind of mad at myself that I hadn't back tested this again sooner. And I have a feeling once you guys see this, there's going to be a few requests for it. Okay, we should be close to, all right. Well, this is a pretty good return if you ask me. 108 trades over 64 days, so that's averaging about a trade and a half a day. 68.5% win percentage, and a profit factor of 3.6 to 1, meaning the profits are outstripping the losses by 3.6 to 1, whereas 1.0 profit factor would just be a basic coin flip and you're not going to go anywhere. So I haven't really changed much over the last few weeks, but the market certainly seems to like this strategy a heck of a lot. So I wanted to share it with you, and again, just remind you that the market is always changing, and what works one month might not work the next month, or even 1 week might not work the next week. And that's what's one of the nicer things about the AI, is that every single evening it's going through and back testing and staying on top of what's working and what's not working. Going back to my initial comments, the AI is seeing the only thing working right now is long. So again, I'll be curious to see tonight when we get our new setup if there's any short strategies in there. Based on the way the market kind of closed weak today, there might be a couple of short strategies in there. We'll see, but nonetheless, the point is if you're back testing strategies, stay on top of them, because what works for a couple weeks might just stop on a dime and stop working for you. So without even reading the questions, I assume somebody's going to want to get their hands on this, because I'm happy to share things that are especially swing traded related, because a lot of people have second jobs and they can't watch the market all day. So again, this is a 3 or 4 day hold, and you can see how well it back tested. Only 100 alerts came out over the course of 64 days. So really reaching for quality over quantity, rather than having a dozen different symbols to choose from every day. So I believe I saved that. Copy all. All right, so let me call that washout bounce, and I'll drop the code in the chat window. And then again, for anybody who missed it, you just click that link, grab the code inside of the URL, file, load from cloud, and you got yourself a working copy of exactly what you just saw. Okay, can you display some of the examples of tomorrow plus 3 day filter? Oh, some of the configurations, sure. Real quickly, I'm looking for the hammer candle. So I've got to define a very long candle, and I also want to have the price be near the high end of the day. So those are kind of the key metrics. But as you see, first off, 5 minute high is the trigger. And remember that we need to have an event for the A windows, for the alert windows to work. And we can only back test the alert windows. So in this case, rather than making a top list, I just used new 5 minute high as the trigger of when the alert comes out. But the filters that are satisfying, it cannot be more than 0.1% above yesterday's close. I'm trying to keep things tight to where they were yesterday. Price filter is really nothing, 50 to 500. But this is where it starts to get interesting. Position and range. So it looks at today's high and low, and the low would equal 0, and the 100 would equal the high of the day. So by putting a minimum 90 in the minimum filter here, we're saying only show me stocks where the price is at the upper 10% of its range for the day. Now, speaking of range for the day, we need a very, very large range, and that's what today's range is. So if I click this button right here, it's basically telling us that today's range is at least 100% of normal. So what does that mean? It means that going back 3 months, Trade Ideas looks at every particular stock and knows what the average range is from high to low, and gives that a percentile from 0 to 100. So what I'm saying is that the candle better be so big that the minimum amount is the normal maximum amount, because we can go above 100. And then so it's this one right here and the position and range, which essentially give us that hammer candle, that long tail, but the tail being because the price is trading at the 90 percentile, and the long candle is there because today's range's minimum is set to 100. And then I've got some basic gap filters here. This trade typically works best when it opens close to yesterday's close and then just takes a giant dip down and then a bounce back up. So I'm putting parameters in here saying it can't gap down more than 1/4% and it cannot gap up more than 0.35%. So hopefully that kind of helped, looking under the hood on that question as to what were you setting these for to get that type of a look. So the only one that came out today is TRXH, and it looks like a decent chart. It's kind of consolidating after moving higher, but the idea being is these long tails essentially are running out the people that set their stops at the obvious levels like that, and they get stopped out and the price bounces back up, and if it makes a new 5-minute high with a long candle like that, well, that's the idea behind that particular scan. All right, how are we doing on questions?
We're doing pretty good, yeah.
All right.
You're pretty much caught up.
Well, guys, like I said, we got to cut this one short a little bit today, so that gives Scott 3 minutes to come on in and give you guys some promo codes and talk about how to save some money. And don't forget, we give you that one-on-one session, which is a $99 value, so it's almost like your first month's free if you consider that, and you'll be amazed how much you can learn in 1 month's period, especially with one of us doing a one-on-one session with you over the phone and sharing our desktop. So appreciate the comments from today and the questions. So now I'll just turn it back over to Scott, and Scott can let you know how to use those promo codes. Hello, Scott.
Okay, there's the mute button. Hey.
There's the mute button.
Thanks, Steve, and thanks everyone for attending. We do have a podcast that comes out every Friday, so be sure to add that to your subscriptions in your favorite podcast application. Just search for Trade Ideas Podcast using the search function to add in your favorite podcast app and add us. And you can download last week's episode or any of the prior ones, and then stay tuned for the new update that comes out on Friday afternoon. We also have a code available for you this month, and it's SUNNY, S-U-N-N-Y, all caps like you see it, and that instantly takes 15% off your first month or year of Trade Ideas Premium or Standard. And remember, both Standard and Premium include that full hour of one-on-one training that Steve mentioned, and it's a great way to go. You can also use that code to add Premium to your existing Standard membership if you want. You can just go to your account management section on the website, click on change your subscription and apply the code when you're upgrading, and there you go. Thanks everyone. If you have any questions, email us info@trade-ideas.com. Email Steve directly, Steve at Andy is Andy at. Follow Steve on Twitter at TodayTrader, or we have our Dan Merkin at Trade Ideas 1. We also have at Trade Ideas and some others. Thanks all. The recording will be up later tonight, available to you at least by tomorrow morning. You should get an email tonight or tomorrow morning whenever it's up with a reminder about where to find it. Thank you, everyone. Have a good one. Thanks, Steve and Andy.
All right. See you next time. Bye-bye.
Thanks, everybody.